Welcome to today's Market Snapshot. My name is Craig Erlam, Senior Market Analyst at OANDA. At the start of the trading week, we are seeing a little bit of caution in the markets. Now, that's not too big a surprise, given the week we've got ahead. We've got a number of major economic events, mostly towards the back end of the week, though. So the first couple of days, there are still some notable events, which we will touch on in a second. But really, it's looking a bit back heavy this week, and I think traders may be a little bit aware of that and maybe showing a little bit of caution maybe at the start of the trading week. We are seeing European equity markets trading around 0.5% to 1% lower. US futures around 0.25% lower at this stage. We're just heading into the open in about 10 minutes time. Really, the declines that we're seeing in Europe seems to be broadly being driven by the commodity declines. We are seeing things like natural gas and copper trading lower at the moment. Brent and WTI crude seems to be moving in between positive and negative territory, having just nipped into positive territory I think for the first time today, but we have been slightly lower for the majority of the session. But really, I think European markets have also taken into account the declines late in the session on Friday as well, which could be contributing to some losses that we are seeing across the board in commodity related stocks. In the FX space, we are seeing some gains in the yen again, but I do think this is just pairing some of the heavy losses which it sustained towards the back end of last week. The kinds of declines that we're seeing today, in dollar yen, euro yen, and sterling yen, don't really are very small in comparison really to the gains which they did make towards the back end of last week. Now, if we're talking about the key events, let's just bring up the economic calendar for today, and then we will touch on a few of the key events for the week as well, given how much I say we've got to come. Now, today we've had the German IFO business climate data, and again it was quite disappointing. Again, you're going to be looking towards things like slowing global growth, emerging markets. We did see a pickup in the PMI reading, so it is a bit of a surprise that we have seen a decline in the IFO business climate. But to be honest, given the Chinese data which we've had recently, and given how important the Chinese market is for Germany, I do think we are going to see potentially this pickup in the next couple of months. Of course, the rest of the emerging markets, we are still seeing poorer trade figures, we are still seeing slower growth, so this is going to have negative implications for Germany as well. Still to come today, we've got new home sales from the US, so that'll be in about an hour's time. Also, if we preview the rest of the week, like I say, it is looking a little bit quiet today. We've only got a couple of things really to focus on today, but the rest of the week is where it gets really important, because we've got two major central bank decisions. The first one comes Wednesday, that's the Federal Reserve. Now, we're not expecting, well, there's very, very little probability of an interest rate hike at this meeting. We've got no press conference following, which tends to suggest that we're not going to see a move that could potentially shock the markets, and in this case would very much shock the markets, given how much an interest rate hike in this meeting is priced out. But what we're looking for is the language in the statement. Are the Fed still standing by the fact that they want to raise interest rates twice this year? What is their outlook, and how is it potentially changed since the last meeting? These are the type of things which we're looking for from the statement. But again, the statement does tend to be relatively short, so there's only so much you can read from it, and broadly speaking, they tend to be pretty similar to the previous statement as well. So you're looking for those small changes which may indicate that we're going to get either more than 2 or less than 2 rate hikes this year, based on their current forecast and their current outlook for both the US and the global economy. Now, the more interesting rate decision this week is going to come from Japan on Thursday, early hours of Thursday morning if you're in the UK and Europe. We're expecting the Bank of Japan to actually announce some form of further monetary stimulus. We had the hints last week that we could see cuts to the lending rate, delving into negative territory for the first time, hopefully to get a better response from the markets than we got when the deposit rate was cut into negative territory previously. Potentially going to get an increase in quantitative easing as well, which is why we are seeing broad weakness in the yen really since around the middle of last week, which is when the speculation first arose that we were going to see a cut to the lending rate, which is intended to try and spur growth. You're effectively paying banks to borrow money from the central bank in order to hopefully lend it to the real economy and hope to spur growth and spur inflation along with it. So we're expecting this on Thursday. We could potentially see some yen weakness in the lead up to this, but again, if we don't get the decision we're expecting, then I personally would expect to see the yen recoup a lot of the losses it's made over the past few trading sessions. Of course, today being the outlier, given the fact that we are seeing it pairing losses slightly. Also this week we've got some key pieces of economic data. The ones that stand out for me is things like UK and US GDP. out Wednesday and Thursday respectively. We've also got Eurozone CPI flash inflation data out this week. We've got the US inflation figure out as well, the core PC price index. This is the Fed's preferred measure of inflation. Inflation comes 2 weeks after the CPI reading, so what is unlikely to cause too many shocks, but this is the one that the Fed pays attention to, and therefore if we do see any big changes here, moving back closer towards that 2% figure, which is the Fed's target, currently at 1.7%, then we could see some broad market reactions, starting with the dollar, but also in things like treasuries and also equity markets as well. Also this week, again, just to point out, we do have corporate earnings season. While people who are watching this video may not be trading equities, it can have heavily influence broader sentiment in the markets, and therefore it is worth keeping an eye on how earnings are doing, whether they're beating or not meeting expectations, and therefore how can that influence the broader market. If they're beating expectations, then maybe people are feeling more optimistic, and then you tend to see the risk on trade. If they're negative earnings and we've got markets currently trading at the very high levels where they are now, then that may spare some risk aversion. So just something to keep an eye on here from the corporate earnings front. But like I say, plenty of data, plenty of economic events to keep an eye on this week, aside from the earnings season, which continues in full flow. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.